It's no secret that infrastructure provision does remain a key challenge in Africa. Now, a lot of the focus so far has been on the need for more and better road and rail infrastructure, but parts of the continent are also grappling with underinvestment in air transport facilities. Mozambique and South Africa have taken two slightly different approaches to financing their airport infrastructure, as CCTV's Angelo Coppola now reports.
Government-owned South African airports went through an infrastructure build program prior to the 2010 Soccer World Cup. Their shareholder told them to go to the markets to get financing. Mozambique, on the other hand, has taken a different approach. It sought private investors to fund and operate the latest development in the north of the country.
Up north in Pemba, there was a bid that was done by the government looking at a private entity to build the airport. We can see how difficult this will be because the time it is taking to have a private entity coming on board to do this, that is what is showing us that the recovering of the investment is still being looked at, and it may end up by government having to invest in that airport.
Manaba's South African compatriots went through the investment scenarios with potential funders on the open financial markets. Investors, they say, have simple needs.
They're looking for predictability and they're looking for certainty when they make those investments. There's no doubt that airport investments are very good investments, but they want to know that if they take a 10 or a 20-year view on an investment, the certainty that exists today will still be there 20 years on.
Mozambique has another challenge, and one that can't be addressed or resolved, which makes for a very limited market in the country.
We have 23 million people in the country, but we only have 1 million flying. So this is the total number of passengers in the Mozambique market, over the 23 million, so which shows that the elasticity is very little.
Countries have adopted different financing models to meet their airports' needs. Brazil has 5 money-making airports. Their other smaller airports are cross-subsidized, and airlines are incentivized to fly through those airports.
In South Africa, we are fortunate in that we have a network of airports. And you will find that if we had standalone airports, it would be a lot more expensive to fly into Port Elizabeth or Durban or Bloemfontein than it would be today. So OR Tambo, being the hub, is able to actually keep tariffs down because it subsidizes the smaller airports.
The biggest challenge facing less developed African countries and their airports is one of passenger usage. Research shows that 50% of Africa's cities have fewer than 50 flights that fly into and from local airports, partially because the populations don't have disposable income and can't afford to fly. This makes it less attractive for investors looking to get involved in those airports. I'm Angelo, Coppola for CCTV in Cape Town.